Hey guys, thank you for joining me for episode 5 of Odds Are, your weekly S&P options forecast. I'm your host, Chris Torres. As we always do, let's start by looking at last week's relative view, comparing what we forecasted to what the market actually did. You can see that the market did in fact breach above the 39.28 level, and then it stayed up there and settled way above the 39.08 level. We were actually wondering whether the market was going to be able to do that twice in a row, where the breach point was higher than the expected settlement range. And it actually did. 2 weeks in a row, it went above and stayed above. So, this market's got some strength behind it, but will it last? We're going to take a look later on in the show at some comparative views of the Bollinger Bands, the breach points, the parabolic SAR, and a couple different things that we're going to keep in mind as we look at the week ahead. But let's first take a look at the moving averages. First thing you'll notice right away is that the short-term moving averages have flipped back up to neutral. Last week we were in bearish territory, and the market had actually progressed from bullish to neutral to bearish in 3 weeks consecutively there, and now we flipped back. Now it's not surprising because the market activity just warranted that. It did in fact come back up with some strength. Now, it did bounce back up, but is this a good bounce or a bad bounce? And what I mean by that, is it a dead cat bounce? For those of you unfamiliar with the term, that's basically when the market starts to drop, and then it will basically bounce back up because a bunch of people are trying to buy the dip, and then that's not enough to keep it propped up, and it'll then drop again. It'll continue its descent. So that is a classic market setup, and we will see if that's in fact what's going to happen here in the weeks ahead. But let's go right into the breach points, and you can see here the breach points are 39.96 on the top side and 38.34 on the downside. There's about 81% chance that the market will breach one of these two levels. Let's now add in the parabolic SAR. As we mentioned, the parabolic SAR goes down. It gets tighter every week. Last week, the market came right up to it. I mean, it touched it almost. It was only 3/4 of a point shy of hitting that 39.59.25 level. And this week, it's now down to 39.50, which is only 8 points higher than where the market closed at 39.42. So very good chance that the market could, breach that and set it up for an upward movement, but it could also gap down. I guess that's, we'll find out here in a few hours, right? But let's now look at the expected settlement range, and we're going to add all three of those overlays together. The expected settlement range for this week is going to be 38.26 to 4,003, and you've got about a 78.83% chance that it'll stay within that range. We're going to now combine all these onto a relative view so you can see it with the recent market performance. All right, you can see here that this week looks pretty standard. You can see how the breach points are nice and tucked within the expected settlement range. That doesn't happen every week, but the breach points are both within the expected settlement range, and the parabolic SAR is right above where we close. So you could look at it and say, hey, this market could very easily go up to the parabolic SAR, cross it, and set us up for a more bullish week in the next, the week ahead. Or it could just go down, because take a look at that Bollinger Band range, the light blue shaded area. So that is usually a range that represents resistance on the top side and support on the downside. And you can see that both the upper breach point and the upper limit of the expected settlement range are above that Bollinger Band. We don't use the Bollinger Band for trading, but it's a great reference and an overlay to combine with other indicators. So that's kind of what I'm looking at this week. And that leads me right into, didn't see that coming. All right, so the upper breach point and the expected settlement range are both above that Bollinger Band, like I mentioned, but the parabolic SAR is only 8 points away. So those are actually conflicting signals, because the fact that the parabolic SAR is so close would lead you to believe that we could very soon shift into a much more bullish, mindset. But the fact that those breach points and expected settlement ranges are so high up there above the Bollinger Band could lead you to believe that it could actually provide some resistance and push us back down to the downside. So this is your classic, who will win out? It's going to go one way or the other. And I think that we've kind of been trading within a range over the last, month or so where something's going to happen, whether it be coming back down or getting trapped into what I call like range bound markets. So you could end up just staying in this protracted range until something gives. I don't see, honestly, a lot of like upside potential. I don't see us breaking beyond the 4,000 level and staying above there. We may come close. Markets do have to have a like magnetic effect. They will be drawn to those round numbers. It's a psychological thing, really. So we may get closer to that 4,000 level, but honestly, I don't see it staying above that, not in the next week at least. Now, could be wrong, but that's just my take on it for whatever that's worth. We're going to now take a look at the quote of the week, which actually ties in nicely with what I just finished, saying about how this is my take on it based on my analysis. And the quote of the week is actually by Gary V. And he says, "Die on your own sword, not someone else's." Anybody watching this that may have an interest in markets, the best thing I can tell you is come up with your own style. Do your own analysis. Make your own trades. It is great to learn from other people. It is great to understand how other people think and what tools they use when making trades or analyzing the market. But at the end of the day, it's your money. It's your risk. It's your call. So die on your own sword, and that's not necessarily a bad thing. It just means let the risk be on your terms. You can make a whole bunch of money or you can lose a lot of money. But at the end of the day, you need to make sure that you can't blame anybody but yourself, and you can't, congratulate anybody but yourself, because your success or failure is in your hands. So with that, I'll leave you guys. Enjoy the week. Happy trading and take care.